Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's April 30th. This will be our chart lesson for the day. And you can see on our daily chart here, we had a big sell-off today. I was a little surprised at this. Maybe they're expecting. I know that at one time we had about a 2-point. They were expecting. We'd built in a 2-point drop in the interest rates, and it didn't happen. And so we're probably unwinding that now. And I thought this would probably be most of that, but we may get another leg down here. It's possible because this is a two-legged correction here, so it's possible we could get another measured leg down here at a minimum in this correction. So, and maybe they're expecting. I know the Fed's between a rock and a hard spot. They'd like to lower rates, but because of inflation, they can't. So they got themselves in a bind here, and it could be that we're. Surely they won't raise rates tomorrow, but they may just be continuing to unwind the 2 points that we already had kind of built into the market there. So we'll see what tomorrow brings. But usually I would expect this to happen tomorrow and not necessarily today. But maybe people are getting ahead of the game expecting the prices to go lower. That would be my guess just looking at things today, because it's a pretty strong sell-off. There weren't a lot of entries today. But it was you can see we opened at the high and closed almost on the very low. The market is closed. It's at 4:15, so the market is closed. And so this is not going to recover any here. It closed basically almost on its low there. So, and we did have some economic news here. Maybe they didn't like that as well. But this big sell-off came well after that news. So. But there it is on the daily chart. Let's flip over to the 2,000 tick chart, take a look at it, and we'll go through the trades and we'll wrap today up. Okay, here's our 2,000 tick chart. And you can see we started out in this, what looked like it was going to be a range today. And there was a gap overhead. We opened down here. Here's where we closed yesterday. I really thought when we were rallying here, I thought we were going to attempt to fill that gap. Then we'd probably end up in a range day that might close near its low or something, but this thing, it just turned south and it was just downhill after that. So there were the two news items. We had the 7:30 news, which was the employment cost index, and then we had some consumer confidence that came in around 9 o'clock. Doesn't like it really. I will say the market kind of turned down after the consumer confidence. Maybe they feel like the consumers are losing confidence in the economy. I don't know. But you can see here, I do believe that employment costs are up. And so, it's people are getting paid more. It costs more to hire people now. So wages are up, and that's not a good sign for our inflation. And that could lead to another rate increase, or at least no rate drops anytime soon. That's what I think we're more concerned with, no rate drop at all versus an increase. But you never know, the market could surprise us and get another quarter point increase or something. I don't think anybody's expecting that, but that's the only reason I mentioned it, because it could happen, and this thing could really get a scare. So, but there it is, all downhill for the most part. It started around, I would say it really started here around just prior to 10 o'clock, and then it was just off to the races down. Every correction just saw selling come back in. But let's zoom in here and take a look at it a little closer, and we'll go through the trades here. You really had to sit tight till after this 7 o'clock news, 7:30 news. You needed to be out by 7:15, and there really wasn't much happening prior to that. And of course we sold off, and we found a bottom down here, and you can see we just we really found this low down here around 51.23 or so, and then we kind of got a trend line off that, and we rather confirmed it here. But even if you don't see the trend line, it's a high or low on a second entry with prices trying to get back to the EMA. So I like that one. It's a little congested, but Another trader asked me about this trade, and I liked it in real time, and I think you have to take this trade. Yeah, there's a little congestion there, but it's because we have buying coming in at this price. Um, the buyers perceived it, especially after this big sell-off. We did have a break in new low already, so um, I like that second entry. Here's the new high. You get a first entry, and it turns back down, and when it breaks above that, second entry. You can see it shot up real fast. Comes back. Too bad it didn't give us another second entry here off the trend line. It gave us another one here, but the signal bar is no good. It looks a little too congested. And I marked this one. Notice the new low here. You basically have a new low, and you get a first entry, second entry, and it fails right off that key entry point. That's like a continuation pattern, and you see it leads to a nice rally there. That is an advanced trade, so I marked it in green. I like it though. Runs up to the other side. And notice we got a channel working up here. You get a close outside, move to a new high, and that's a second entry short. Now that was a pretty strong momentum move up there, and we're definitely in an uptrend. You can clearly see it there. So I'm not crazy about shorting here, but we're so far away from the EMA on a second entry, and this has played out. We do have the break in new high, and it is turning down off the highs up here. I think that's worth the risk to come back if you understand what's going on there. Then, of course, we're headed back to the trend line here. And we do get a bounce off of it, but it's during the news, so you just kind of have to sit tight. And that leads to a break. And prices couldn't even make a new high on this. They could never. They tried it several times to go higher. Gave it a good shot here and just couldn't do it. All these rallies ran into strong selling. And eventually it was off to the races. But we did have this failed breakout here. You would expect this to fail, especially when it moved to measure. It moved a perfect measured move almost, and you get a little triple test down here with a decent signal bar. I like going long just to hopefully you ride it back to the EMA and maybe back to retest this, but this thing just kind of keeps going. So, and you do get a second entry short upper. I did not mark this because there's a lot of momentum in that move, and while yeah, you can argue there's a close outside, it's not a convincing one. So this thing could have gone higher. I think you need a lower high here. Now you might argue there's a 2-bar matching high here, so that could be a higher low, and that's a possibility. I believe there is room to get out there too. I just was not crazy about. I mean, there just is enough room to get out, as you can see. I just think you needed it to at least break higher there, and then maybe catch it as an engulfing bar where you got more room. It was really tempting here on a lower high, but you're right into the EMA, right into the support, and it could bounce there and go higher. It doesn't do that. The bottom ends up falling out, but you just, if you put this to the far right of your chart, it looks like we're still trying to work for a retest of the high, maybe still in a range. And it just doesn't look very bearish there. And so I just don't think you can go, you're not expecting this sell-off here. And it ends up coming though. And there's actually we confirm it here, but the higher bar is right here. And while I think it's like 3 ticks. I mean, that is so tempting to go short right there. But it doesn't fit our setup pattern, so I did not mark it. But if you took that, I'll just tell you, you're breaking the rules. Eventually that'll get you, but I can understand. I mean, it's just 3 ticks, so it's not a lot of risk. Granted, I'll give you that one, but eventually it'll burn you. So I really liked that trade, and but you just got to skip over it, and we just keep running lower. By this point, you might argue, hey, this looks like one of those strong trends. Look at all the little small dojis and stems, and you'd be right. But the problem is these were the overnight lows, and it is dangerous going short right into that. Now it just keeps going, but you've watched it enough to know that it doesn't always keep going like that, and it'll bounce there and burn you. So again, I just don't think you can take it. We finally get a break here, and you can see we had a first entry And then we had a second entry here, which you just can't enter on that. You'd have to enter that on an engulfing bar, in my opinion. So really you needed to wait. You got a triple test here. So maybe you enter on that triple test, but then you get a lower high and a second entry short here. And that's a really strong sell-off. So you'd expect a retest of the lows here at a minimum. So again, you may enter here. I marked it green, but you know, you could argue there is a, I mean, you don't have to argue, there is a triple test there. It's not a perfect signal bar, but I think it qualifies. I think it closes in the lower 1/3. I just think waiting on a lower high here is the better thing, and you get that here, and that's also a second entry short. That's the better place to enter, in my opinion. And then of course we bounce, and now we're just chopping sideways, and the market's trying to recover here, but it just cannot muster up anything. And what it does, it comes right back up here and tests this again and turns down again. And so now you can argue you've got even more than a triple test here. It's not a second entry, but notice too, you get a break, close outside, and a move to a new high, and you test that resistance one more time, and it turns, you get instant rejection. So if it breaks below that, you're probably headed back to the EMA at a minimum, and probably to test this low, and it just keeps on going. This was a great entry right here. This thing, it just keeps going. Boom. And of course we get a break here and a move to a new low, and then we're chopping sideways again until it does break out here. There is a second entry short here. Notice you got a break and new low, but then you get a little small trend with a break and new high, and that's a second entry short. And you wouldn't have this channel here yet. This channel doesn't help you a whole lot other than the midline, and really you wouldn't really have it until you get this high here, and then it doesn't really even help you after that. So this doesn't really help you a whole lot. Okay, sorry, I had a slight interruption there, but I think we talked about this trade last, and we're working down, and you do get a break here, but you just don't really get a setup for a new low to take a short there. And again, you probably wouldn't have you wouldn't have this trend channel until you get this high right here. I think we were talking about that. I think I mentioned that as well. And then maybe we didn't talk about this trade. Just to be sure, you come off the trend line, you try to go higher once, twice. So there's a failed second entry long there. That's a continuation pattern coming off this trend line here, and it does continue lower. There's another little two-legged, it's a hidden second entry, and it's a very nice signal bar, but it's a little congested. It's right into this support resistance line, so I don't think you can go short there. I don't like going short there. And of course we bounce and get a break of this yellow channel, but no setup really there. And we just continue working lower. We get these corrections. This one again, you might argue there's a triple test, but it's not a great signal bar. I didn't like it. It's getting late in the day, and we bounce. You get a move up. It's not very convincing either. You get a close outside a new high, then you're working down. Close outside new low, and then you're working back up, and we're just doing that all the way down on this large trend channel here, the lighter blue one. So you really had to play these tighter, smaller channels here, because you're not getting a whole lot of help off this trend line. I mean, it touches once, and then the next time it touches, it's after 230. So it doesn't really help you, other than to maybe confirm some of these midlines in here. But again, that's after the fact. The only trade that's the only real setup we get off that trend line until after 230. So it just, the bigger blue channel does not help you a whole lot. I think it's valid, but it doesn't help you a whole lot. And you can see it continues to hold prices all the way down here. It gets a little wild right around 3 o'clock, and then well, the market's closed now. It'll open back up in a few minutes. So we closed almost on the low. So turned out to be a very bearish day. We did not fill the gap, the overhead gap from from the open to the close, or the close to the open. We opened lower from where we closed yesterday, and usually the prices will fill that gap real quick. I call that a gap. You know, basically, if you didn't have the overnight stuff in here, the gray stuff, it would show the market close here at the close of the other market and then open right here, and there would be a gap there. And so that's why I call that. That always tends to confuse new people because they don't see a gap, but just assume that this is where it opened and that other line is where it closed. So if you saw it only open here, you wouldn't see any other price action. Well, there's the gap right there where it closes. So, and there is if you're using NinjaTrader, there's a place to put in the previous day's closed, current day's open, and there's some other things you can add to it or take off of it. I just want to see the close at 4 o'clock the previous day and the open at 8:30 a.m. on this day. And why do I choose 8:30 a.m.? Because that is when the regular market opens in New York or whatever at 9:30. It's 8:30 Central Standard Time for me. So hope that makes sense. I explain that a lot, but people get confused by that because they don't see a gap because we're looking at a 24-hour chart. And we do use that 24-hour data, although that gap often gets filled. So hopefully that's helpful to you. But there it is. Again, not a lot of trades. A lot of this sell-off happened after 2:30. A big part of this, when it came back and tested that trend line again, and it just sold off. So every correction was pretty much met with some really strong selling. So we'll see what tomorrow brings. Could be crazy day with FOMC day. Remember to be flat about an hour going into that 1 o'clock announcement. You don't want to be. Sometimes that last hour before the news on FOMC day, you can get stuck in that. It's real tight. Sometimes it can be as tight as 4, 5, 6 ticks, and it just goes sideways for an hour, and you know. And you don't want to get stuck in that. Other times you get some movement, but to be safe, be flat about an hour prior to that announcement and wait till it settles down before you try to trade again. And a lot of the brokers are raising their margin during these red news items right now anyway, so it's probably wise to just get out because of that alone. Because if you're just trading singles or a couple of contracts and with day trader margin, you don't need that much money. But if they raise your margins to a regular margin or sometimes even higher, then you don't have enough money in your account to trade anyway. So it's probably good because it keeps people that shouldn't probably be trading it from trying to trade it. And I know that there's a bunch of strategies out there that teach you to trade the news, but do not try to do it. You need deep, deep pockets because you just never know. Just like here, it drops in a few minutes that far, and then next thing you know, it rallies that much more. So, and you've got to guess which way it's going to go first, or you're probably going to get burned. And sometimes it'll shoot one way real hard before it goes in the actual direction, which was down today. It did shoot down early, but you see how it took most all of it back. It almost always takes all the news back. All this happens on emotions, and then the market wakes up and says, oh, that was just emotional. We shouldn't have sold off that hard that fast, and it takes it all back, and it kind of resets right about where it was, like it did here, and then the real day starts, and it's all downhill from there. So just keep that in mind. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. Don't forget, it's FOMC day. Be flat by noon. Don't go back in the market until it settles down after the 1 o'clock news. It could be a crazy day tomorrow. Who knows what to expect. Well, we might have got all the fireworks today. It may not be anything, but my guess is tomorrow's going to be a crazy day, and it could be, and we could get some kind of surprise, and it could be a big sell-off, or we could have a big rally even. You just don't know. So even if you had the news, I always tell people, even if you knew the news ahead of time, it wouldn't do you any good, because you get these knee-jerk reactions that it just jumps all over the place in just minutes, and you probably get in and out, and you're lucky if you got a profit, and you probably end up with a loss, and maybe a bigger loss than you would expect. So don't try trading that stuff. Listen to me. Trust me on that. Uh, it's like gambling. Yeah, if you hit it right, you can make some money, but most of the time you're going to get burned. So don't try to do it. All right, I'm going to wrap it up. We'll be back again to do it tomorrow. We'll see what the news brings us tomorrow. And should be an exciting day, one way or the other. And we'll do it again. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.